How's it going, traders? Papa Wall Street back with another weekend review. This week I'm going to do something a little different. I'm going to create two videos. This first one is going to go over the broader market with the ETFs that I'm watching into next week and potentially into the next couple of weeks. ETFs that have been showing, sectors that have been showing relative strength to the market. So if you get a chance, make sure like and subscribe to this channel. And I do put these weekend videos out every single weekend, as well as some trade ideas that I'll put out throughout the week. So let's dig into the charts. First up is SPY. And you can see, we've now had 3 weeks where we've been selling off. And, about 5 weeks ago, I was mentioning watch this area of interest in yellow. We came into it here, spinning top, failed breakout, and then we broke down from that level at just around 454 to 455. So that is definitely going to be an area of interest I'm going to watch when we retest it, because you could see back here in September of 21, that was our all-time high before we pulled back and then eventually broke back over, retested it a few weeks, tried to break higher, you could see back here, but failed ultimately and then failed again at that level. And so we retested it twice here, we retested it for 3 weeks here, and we just continued to fail. So when we get back to this level at 454, I think the breakout of this level, when we do get there, I think is going to be a nice breakout. You should see a nice trade back up to the previous all-time highs, and then hopefully that sends us even higher. But before we get there, we've got to come down. And one way I'm looking at this potentially is an ABC retracement with an ABC counter trend, and potentially another ABC down to our COVID lows. I think that's what's happening. Of course, I never want to have any, and as traders, we don't want to have any bias in terms of what the market is doing. We just want to look at the charts objectively and see if what we're seeing is true, and always have a plan both to the upside and to the downside. I think that's really important as traders, that we don't allow bias to creep in. But just looking at the candles, looking at the weakness in these last 3 weeks, I do think we are going to test this little cluster, this little Fibonacci cluster between 418 and 420. I feel like we will test that this week. And I think the question that everybody has in their heads right now is, does this act as support as it has these last, 4 candles that have come into this, these last 4 weekly candles? So, that's the real question. When we get there, a couple of things can happen. We can just hit it and bounce and then base for the week. We can hit it and just continue to sell off, right? Sometimes you get those undercuts like we got here. Or we could just hit it and just bounce right back higher. There's a lot of different things that can happen. The one thing to note about this coming week, it's a Fed blackout week, so there's going to be no Fed talkers or Fed speakers. And so that should allow for the noise to be out, right? They keep coming and saying the same things over and over again. We're going to continue to raise rates. It's going to be a half point. It's going to be a quarter point. And it just creates this volatility in the market. We all know interest rate hikes are coming. So for them to continually say that, it just creates this air of volatility that I think is just not needed at the moment. There's just enough going on in the world. We don't need to constantly be reminded of interest rate hikes. So in any event, that's the area that I'm going to be watching this week, 418 to 420. And if we do lose that level, as I mentioned, this to me looks like an A, B, and potentially C wave coming down. I would be watching for a move first to 400 and then potentially to 380 to 383. That would be right at our COVID low, which you could see, COVID low anchored VWAP, which you could see is anchored right back to here, this COVID low candle. So that's what I'm looking at for SPY. Let's take a look at the Qs. Really pretty similar, right? A, B, potential C. you could see we already tested the COVID low anchored VWAP. So to me, what that says is that the Q's tech is relatively weak to the overall market. And that's exactly what we've been seeing. Again, 3 red candles, 3 red weeks down. You could see the upper wicks, right? So we're ending our weeks on weakness. So, you know, if we do get a pop early in the week, watch for the end of the week to sell off, because that's at least that's what's been happening these last 3 weeks. You know, selling pressure. We're trying to push higher and sellers are coming in and pushing us back down. So we did lose the 618 from this prior swing high, swing low. We're coming back down to this 382 retracement, which is from our COVID low to our all-time high. And it looks like, you know, again, this orange band or yellow band of support potentially, right? We had 2 candles come in here. We had 3 weekly candles come in here. We're more than likely going to test this level this week. And if it doesn't hold, if 315 does not hold on the Qs, then you can expect further downside, you know, potentially down to 305, maybe to 300, and then 286 to the downside is what I'd be watching. All right, let's take a quick look at the small caps, IWM. Very similar story. You know, here we came down to the COVID low and tested it again here. I think ultimately that's where we're headed. We have a little bit of a cluster at 187. We've got 2 382 retracements from prior swings. So that should give us a little bit of support, although we had support from that back here. That next touch, I think, is going to be really important. That third touch is always critical. Do we bounce or do we continue to break down? If we continue to break down, watch 181 and then our 200 SMA, which is just below that, and then 170 below that. So, you know, it looks relatively weak, you know, from RSI perspective. We had a TTM squeeze fire to the downside back right about here. And you could see we got the move that you would expect off of a TTM squeeze firing to the downside. So no surprises here. We're still kind of stuck in a little bit of a range between 187 and 209. So, you know, ultimately, you know, I think the best scenario would be just to bounce at these lows of 187 and just continue to consolidate. But, you know, if the broader markets, if the SPY and the Qs continue to sell off, expect small caps to also sell off. Now let's take a look at some industries, some ETFs. So the first one that's actually showed fairly good relative strength. Now, as I go through these ETFs, keep in mind the last 3 weeks on SPY and the Qs have sold off. And so let's look at the last 3 weeks on JETS, right? So yeah, that first week it did sell off, but last week we had a bullish engulfing candle, and this week we had a continuation. So to me, that's telling me relative strength are in JETS, which are our airliners, you know, LUV, AAL, DAL, and UAL. And I'm going to go through 1 or 2 of these names in my second video, which will dive more into the individual names that I'm going to be watching for this week. But you could see we did get a break on 50 on RSI here on the weekly. We had a TTM squeeze setting up about 5 weeks ago. That's looking to slingshot higher. So looking pretty good here on JETS. Let's see if we can get over the 50 and get over our prior week's high, as well as breaking outside of the channel. Next up is XLP. So XLP are our consumer staples. You can see them here. We have Procter & Gamble, Coke, Pepsi, Walmart, Costco, Philip Morris. You know, these are products that regardless of whether the market is good or we're in a recession, these are products that are always going to be selling. They're the staples in the market. And so in looking at the chart, you know, you could see we back tested the 50 simple moving average, we moved up 13%. We tested the 50 simple moving average again, we moved up 14%. And back here, we tested the 50 simple moving average, and we're currently up 13%. So I'm not saying that we have a little more juice to squeeze out of this, but it's very possible, you know, we could come up to the $82 mark before completely reversing. Again, it was one of the sectors that looked pretty decent last week relative to the market. We've got room on RSI. We had our squeeze setting up back here. You can see it was a pretty long squeeze. You know, look at the squeeze in price as well, right? And then as soon as we started to fire, we had this nice move higher. So now that that squeeze is over and dissipated, what I would watch for is just another squeeze to set up, you know, as we either come back down, maybe we back test this 1618 extension, or maybe we just hold and consolidate, maybe flag over 78.21. But that's what I would be watching for. We've already back tested the breakout level twice and held. Let's see in the next week or two what consumer staples do. So another sector that has been looking fairly decent. Again, keep in mind the last 3 weeks have been red for the market. This was green, had a slightly red day or red week, and then tried to break higher but came back in. So in essence, this is like another flag. I'll wait for that to clear. So we had a flag on the weekly. It tried to break out and it failed. And you know, some names again on real estate. You have AMT, American Tower, PLD, CCI, EQIX, and PSA. So no squeezes, decent amount of room on RSI to move higher, and we are holding over that 50 simple moving average. So going to be keeping a close eye on real estate the next week or two. Another sector, utilities, has done pretty well in the last month, but this one had a bigger pullback with the market. So the names like NEE, Duke Energy, SO, Dominion Energy, you know, these are going to be more of your energy utility names. And the one thing I'm bringing this up is because, you know, we have a 4-dot squeeze that fired off, 5 dots. Generally, you'll get maybe 6 to 8 squeeze dots fired, and that's relative to the time frame. And so in this case, we're 5 weeks green, or 5 weeks fired, I should say. And so we might have another 1 to 3 weeks of this firing. So I would just keep an eye on this. It's very possible we're just going to pull back to 72.27. And, you know, again, just looking at the prior swings, right? So this swing here, 19%. This swing here, 16%. This swing here, 11%. This swing here, 13%. And now this swing here, 20%. So this swing here is bigger than all the prior swings up. And so it's likely that this is topped out and now we're going to look for a pullback. You know what I would, excuse me, what I would normally do, you know, I'd take a look at the prior swings and look at where these swings pulled back to. You know, this one pulled back, you know, maybe to 50%. This one pulled back probably like to a 618, but ultimately failed. This one pulled back probably to a 786. This one pulled back probably to a 618. And so, you know, when you're looking at this swing, I would probably look for a move somewhere between 69.24 and 70.76 before resetting and possibly going back higher. Don't think, you know, energy utilities are going anywhere, and, you know, energy prices continue to rise. And so, like anything else in the market, you know, stocks go up, markets go up, and then they consolidate and come back down and retrace. And that's what I would be watching for over the next couple of weeks. You know, these areas of interest, these areas that of interest that have been showing relative strength in the market, do they just need to reset, come back down, bounce? And can we grab them at a discount before the next leg higher? So that's what I would be watching on XLU. Taking a look at gold. Gold faked us out a few weeks ago. This is a really big fake out. Trapped a lot of bulls up here and sent us right back down to this 618, which is from that swing low to that swing high. And that's exactly where we bounced over these 2 weeks. We've pushed higher, but now we have a bearish engulfing weekly candle over last week's green candle. So that's not good. And here again is our squeeze setting up, right? You have your squeeze in our wedge, squeeze fires right, actually fired right here, right? And now we had this big move. And so we're, let's see, 3, 6, 9, we're 10 weeks into the squeeze. So this one is already done in terms of a squeeze firing. So what I'd watch for is just some consolidation. Watch, looks like 50 RSI on the weekly has acted as a nice pivot level. So watch for gold to cool off a little bit, maybe in the next 1 to 3 weeks before making another potential leg higher. Taking a look at our last sector, this is metals and miners, NEM, RGLD, ATHL. You know, we've been seeing metals moving pretty good. Here's another great example of the squeeze working the way it's supposed to. You have all this consolidation right here. You have this beautiful squeeze setting up, and as soon as it starts to tick higher, right here, you get that fire right here. And now you get that big move up. That's what I'm looking for in a squeeze. This is like textbook perfect, right off of 50 RSI, squeeze fires with big momentum, big move higher, and now we're consolidating. Again, bearish engulfing candle on our previous breakout over that 786. If I were to extend the chart backwards, you could see, you know, these were previous highs right here. So I marked them off. These were the 2010 highs that we're coming into here. And then these are the 2011 highs that if we hold these levels, or maybe even back test here and come back higher, I would expect to move up to the 2011 highs at 77.21. So yeah, I mean, that's really what's on my radar from a sector perspective. What I like to do is I dive deeper into the sectors and find the relative strength within the sector that is showing relative strength, and generally there's some really good opportunities there. So before I finish off this video, I know we're 16 minutes in now. Just wanted to give you an update. I do have a weekly newsletter that I put out. I am working on that currently. It goes out at 6 o'clock this evening Eastern Standard Time, always on Sundays, and you can see, you know, it's just it's a broad market overview, sectors, economic calendar, my weekly charts, and just a little bit of a snippet. And there's more down there, but I would highly recommend just to subscribe to it. You can see, let's see if I can get that. There we go. Just go to, I'll leave the link down below, but just go to this link and put your email address in here and subscribe. And these emails will go out to you every Sunday. I also do some midweek updates as well. And last but not least, I do have a technical analysis course where I teach 2 to 3 live classes a month. And it's got about 20 plus hours of curriculum in here. I do an office hours, which is basically a live session. It's usually about 75 to 90 minutes every 2 Wednesdays. So I have one coming up this Wednesday. If you want an invite on that, just send me a DM on Twitter. I'd be happy to send you the link. But I have all of my updated charts, my weekend video, chart requests, scans, all my videos, my trading psychology, and that's basically $79 every 3 months or $275 for the year. I do have packages where it includes one-on-one. So this one includes 4 one-on-one Zoom calls where I can work with you specifically on your trading strategy or any particular questions that you have. And then I also have a lifetime plan that only has 1 seat left. So if that's of interest to you and you like my work, that's also very beneficial. So yeah, in any event, you know, I think the theme of next week is caution. I know we've been cautious for some time now, but now with the market pulling back in a big way, I think we just have to be very cautious with any swing trades that we're taking. There's certainly going to be opportunities for day trades and scalps intraday, and if that's your style of trading, you know, there's definitely opportunities there every day. But, you know, for the swing traders out there, it's just time to be cautious. Let the market pull back. I will continue to scan for relative strength every single day. And if I see, you know, stocks that are looking pretty good to take to the upside on a bounce, maybe they're coming into a cluster, Fibonacci cluster, or just coming off of prior support, you know, I'll certainly put those trade ideas. But I would expect to have less ideas this week, just taking into consideration where we're at. So just keep that in mind. And yeah, appreciate your time. Like I said, feel free to subscribe to this channel, like and comment if you have any thoughts, and I will catch you in the markets tomorrow.